So let's review what we're going to be talking about here today. And specifically, I'm going to be talking about trend following or swing trades. And I'll be defining exactly what I mean when I refer to swing trading, because I know there's a lot of different definitions out there. But the emphasis will certainly be on the trade management and the risk management. So I'm going to break this up into really 5 different discussions. And that's going to be starting off with, how do you define a trending market? And I'm going to be getting into using the wave and market cycles, as well as the market look back, the market memory, in order to make an assessment about the trending or non-trending environment on the particular time frames. We'll then be going into how to set up a swing trade, and I'll talk about what a swing trade actually is. We'll then move on to understanding the point of validity of a swing trade, of a swing entry. Now, when I talk about point of validity, I'm talking about what's the rationale behind why the trade was entered in the first place. It's a very different way of looking at risk. It's a very different way of looking at stop loss placement, and we'll be getting into that in depth. Then moving on to using the 34 EMA wave and psychological levels for stop loss orders. And then finally dealing with market cycle transitions within a trend. In other words, we know that sometimes a trend might be established, but sometimes there's little hitches and hiccups within the overall trend. What happens when we have these little shifts in an overall uptrend? Because we know many times the market could be heading up, but sometimes it'll take a breather. And what do we do during those times? What do we do in the market cycle transition? So those will be the topics for today. Again, all with the idea in mind of trade, and let me throw in there risk management for swing trading in particular. So if you have any questions, go ahead and type them in as we move along, and I'll be happy to answer them. Please, my request is keep them on topic. I don't want to stray too far off our chosen topic here today, so I appreciate that. All right, so without further ado, let's go ahead and get going. Now, the first thing to deal with is going to be our view of the market. I mean, the charts are the view by which we're going to determine what we want to do when we're looking for a trade. Now, this is not necessarily my trading setup. This is definitely these are definitely my charts, and certainly these are many of the tools that I might use, but this is not necessarily the view from which, if you were sitting here in my office, that you would be seeing on my multiple screen setup here. This is but one half of one screen, so it's a small corner. So what I want you to keep in mind when you're looking at these charts is that what I want you to focus on is really the template, not the layout so much, but the template. Okay? Because ideally, just so you know, what I do on my screens, and just so you know, I actually turn my monitors on their side, so my monitors are vertically oriented. And I mention that because a lot of times I'll get a lot of questions about how do I set up my IBFX platform, how do I look at my charts, how do you look at multiple chart views. And what I like to do personally is look at a single symbol across multiple time frames. Again, what I like to do is, for example, look at the euro US dollar. We can just pull that up for what I like to look at is a euro US dollar, but across multiple time frames. So what I would first do is I would have the euro US dollar on each one of these screens. Okay? Then what I'd like to do is have a 15-minute, a 30-minute, a 60-minute, and a 240. So now I have 15, 30, 1 hour, 240. I want to make sure that each one is playing to the end. So what I want to make sure you're doing is you're clicking both your chart shift and your auto scroll, so everything's playing to at least the end, so you can see the hard right edge of current price action. All right, so now that I've got the time frames that I want and one symbol, for our purposes here today, in terms of swing trading, what I want to do is have this same template on each one of these screens. I want to compare apples and apples. As you can see here, I've got like apples and pineapples. I've got pivot studies on one. I've got my Fibonacci-based exponential moving averages, something I call my lazy days lines, on another. I've got my grab indicator on one. I've got my wave and the automated PRS overlay on another. So it's not really giving me the same view. So what I want to do here is I want to have the same view. So whatever your chosen indicators are, whatever your chosen tools are that you like to overlay on your charts, what I recommend is you go ahead and put all those studies on one chart, go ahead and save it as a template, and in this way you can put that template on all of your charts. And what I like to do, so I have the 15, 30, 60, 240 here. The time frames that you're not seeing would be time frames like a daily as well as a 5-minute chart. Okay? So having said all that, what I want to do is actually use this bottom right hand corner template here. Or I could use the grab template. Either one will do. Okay? Either one will do. So let's go ahead. I'm going to go into my templates. I'm going to go ahead and grab what I called my PRS template. And this actually has both the PRS and the grab actually running on it. I save a lot of different templates. That's just something that I do. And this way, if I ever want to toggle between different sets of studies, I've got them already pre-saved on my platform. It makes it very simple. So I'm just going to go ahead and do this across all my time frames here. So I have, again, an apples to apples view. I think taking the time to make sure that you understand why you're using certain tools is a pretty big step. Okay? And what I think that will accomplish with the view here, which is why I'm using this particular view, what I think will accomplish is we'll be able to squeeze in the market look back for each one of the time frames and do what I call triage. Okay? So this is all the preparatory steps before we start looking for setups. By the way, this would be the exact same thing that I would do if I was looking for momentum trades or any kind of trade entry. Really, you want to start from a baseline view of the tools that you like, coupled with the indicators that you want overlaid, so you can do a couple things, basic things. Make sure you're looking at the full market memory or market look back of the time frames you're looking at. We'll go over that in a moment. And make sure that you can see what the market cycle is. So for the market look back for the 15-minute chart, it's about 2 to 3 days. 5 days at most. As you can see, I've got about 2-3 days here. That's fine. For the 60-minute chart, it's 1 week, minimum to 2 weeks. And you can see I've got the 1 week look back here. On a 60-minute chart, it's 2 weeks. And again, you can see I've got April 1st to the 15th. And finally, on the 4-hour chart, it's about 6 weeks, 4 to 6 weeks. And I'm way back February 15th. So I'm more than enough on my look back here. You're going to end up usually with about 6 to 8 weeks. It's not a perfect, the way these charts scroll on any platform is not going to put you perfectly within the look back. I'd rather you be slightly over than under, but just work within those guidelines as a general rule, and you'll have a good perspective of the price action that's relevant for each one of these time frames.